Good afternoon and happy Thursday, everyone. It is Scott Wohlers with River Place Capital. It is Thursday, February the 24th. I'm just going to touch a little bit briefly on what happened in markets last week and really talk about what's happening in markets today with the big news out of the events that happened in Ukraine overnight with Russia's invasion of Ukraine. And the impact that that's having on the stock market and the stock market moving forward. So last week was another down week in the S&P 500. The S&P 500 finished the week down 1.5%. And as of the beginning of this week, as we saw escalating tensions in Russia and Ukraine, the S&P 500 has now entered into correction territory, which means it is down 10% from its most recent highs. It's actually down around 12.5, 13% as we speak currently. And the NASDAQ actually entered into bear market territory today before quickly rebounding, but we'll touch on that in just a second. The mid-cap index last week was only down 60 basis points, continuing to outperform the large caps, which have been a safe haven for so many people for so many years. And the small cap index, as measured by the S&P 600, was only down 20 basis points. So doing, again, much more outperformance. And what you're really just seeing is you're seeing a leveling off of the small and mids and the large kind of falling down to those same levels where they currently are. So over the night, we woke up this morning to the news that Russia had invaded Ukraine, and there has been missiles and things have been shot, and conflict is now here. And you saw an initial reaction downward in the market with the Dow opening up down around 800 points. What's very interesting about what's happening today and what has been happening this week is all week leading up to this, is we have been, for the last 2 weeks or so, we have really been pricing into the marketplace the fact that the Russians were going to invade. Our president was telling us for several days that this was imminent, that this was the outcome that he anticipated was going to happen in Ukraine. So we did a lot of selling on the news of this, into this, and investors have really been worrying about three things in the marketplace. You have inflation, you have Fed and Fed policy concerns, and then you have the crisis in Ukraine and Russia. Well, we got some clarity on the crisis in Ukraine and Russia in the fact that Russia did invade. So now we know what's going to happen moving forward. We're going to implement stern sanctions and tougher sanctions on Russia, as well as many of our allies across the world. So economically, right now, it does not have a material impact on the United States. You might see higher gas prices at the gas pump, but for the majority, you've seen all of this priced in. So when you saw the initial reaction today, you actually saw the NASDAQ go down 3.5% on the day. And the NASDAQ is actually having its worst month since October of 2008 this month. So your high cap, high growth tech names have really been hit hard off of the news of what's going on. But what you've seen today is you saw the lows at down 3.5% on the NASDAQ, and you saw a rally back in the NASDAQ, and the NASDAQ actually turned positive for a little bit today, and as we are talking currently is very slightly down. But what you're seeing is all of these names that are down 30 and 40, 50, 60% from their highs are really starting to bounce back and off of their lows, which is a great sign for us that maybe we are putting in a bottom here with this conflict, and that investors are realizing that we already have priced this in. So what do we do with that news, and what do we do with this information that we have? There is now a war in Europe. So what do we do as an investor? Well, if you are anyone who has a time horizon longer than a year to 2 years, this is a phenomenal buying opportunity for you. The other thing to remember too is what we have seen over the last 3 years on total returns in the S&P 500 are as followed: 30%, 18.98%, and 28% returns in the stock market the last 3 years. Those are phenomenal returns, and now we are only down 12% off of that. So just remember to put things into perspective as you are navigating through this and you're seeing some selling going on in your accounts. At River Place, what we did is we took advantage of today and we rebalanced our accounts, buying those names that have really been beaten down and bets that we really believe that they're going to have a nice rebound here and giving us some outperformance over the market overall. So if you have questions about how to navigate through this or what's going on in your individual portfolio, please feel free to reach out and give us a call. We'd love to help you through this and help you navigate through this uncertain times. You can call us at 904 346 3460, or as always, you can check us out online at www.riverplacecapital.com. I hope everybody has a wonderful rest of your day. Thank you so much.